Today, I want to talk about, as a Canadian investor, what, in my opinion, is the best opportunity on the TSX to invest in a wide range of international businesses that pay dividends and growing dividends, but doing so in a Canadian hedge manner where you don't have to deal with paying taxes in other countries, withdrawal taxes, or any FX issues as well, just simply all in one ETF. And that ETF is the BMO International Dividend ETF. This ETF, over the last 7 or 8 years, has performed pretty modestly, increasing in value very slightly, other than the dividend that they pay of about 4 to 5%. But I think it's essentially done its job, even through lots of market turmoil over the last year. You kind of see it's held up pretty well around the $20 mark. Dipped down a lot because of all the issues with energy and the war going on in Europe, where this ETF has a lot of business exposure. But ultimately, these are mature companies that are being held. All of them pay a dividend. Most of them pay a increasingly growing dividend. And I think, just as Canadians who typically are over-indexed on Canadian securities, this is a great low-cost way and really effective way to get more global exposure. And that's what I want to talk about today. So going through this ETF a bit more, performance aside, you can kind of see since inception, it's returned about 5% annually, which is about 1% or 0.5% higher than the dividend it pays. It's a medium risk stock, or ETF, given the fact that it has so much capital being returned as part of the overall return. You're not really counting on capital appreciation. But I really want to focus on first, geographic exposure. So this ETF is primarily across Europe. You have Germany, France, Switzerland. Lots of the other countries are countries like Italy, Spain, etc. So you're getting a lot of European exposure in this ETF, which is really hard for Canadians to get, because even lots of the Canadian companies that do operate outside of our borders, that trade on the TSX, they're primarily trading or doing business in the US, maybe Mexico, maybe South America, if you're talking about Scotiabank and those kinds of businesses. But we don't have tons of businesses that do a lot of business in these types of countries. So it's great to get a one-stop shop for all that exposure in one. You're also getting almost 20% exposure to the Japanese market, which is another one that's hard to get exposure to out of Canadian securities, and the 6% here in Australia as well, 4% Hong Kong. So just generally, you're getting a very wide range of securities. I believe this ETF holds about 100 securities. And through those 100 securities, they're well diversified across sectors like healthcare, consumer staples, material, industrial, consumer discretionary. So what I also like is that Canadians tend to be over-indexed on energy, but you see energy is a pretty small part of this ETF. So you're really getting exposure to segments of the economy as well that we tend to be underdeveloped on in Canadians' portfolios. So I think this is a great ETF to hold, not just for the geographic diversification, but also just for the sector allocation, which differs from lots of the Canadian securities that most people typically hold. Just to talk about the quality of this ETF, and this isn't an ETF that's super yield hungry, that's doing everything to put the highest yielding companies in. They have a very tumultuous process of what gets put into this ETF, making sure over the last 3 to 4 years, preferably the yield or the dividend payout per share has been going up, but at a minimum is healthy, steady, and the payout ratio is going down as they're funding other elements of their business. So they're really strict on the types of businesses that go into this fund, and they tend to do dividend increases on the ETF per share every couple years. We just got one earlier this year, actually. To go over some of these businesses just at a high level, you have some of the biggest companies in the world that operate out of Europe. So Novartis, Nestle, LVMH, which is a premium luxury brand company, Toyota Motor from Japan, Unilever, AstraZeneca, BNP Paribas, which is a bank, I believe, Volkswagen, GSK. Can kind of go on and on here. L'Oreal, really high quality companies, Diageo. I think they have some Coca-Cola, like European distributors and stuff like that as well. So it's lots of really solid businesses. It's not small caps or medium cap companies in here. These are large cap, proven dividend payers, developed, stable businesses that are getting you diversification in other parts of the world. At the same time, they're paying you a monthly distribution, which adds up to, I believe, right now is about 4.5% annually, which is pretty nice income to be getting in on a monthly basis. One other thing I like about this ETF is it's completely currency hedged. So this is just a unaudited report on this ETF, but you'll see here, like, no matter what happens with the euro, depending on interest rates and inflation and the war that's happening over in Europe, this ETF is hedged to Canadian currency, which is great for Canadians that are looking for that exposure to international markets, but don't want like a 10 or a 20% hit on their investment year to year based off of what FX rates are doing. So this is another element of this ETF that I love and I think makes it a best-in-class option for Canadians looking for this type of exposure. So just a quick little video here in terms of one of my favorite ETFs that I hold in order to get exposure that I can't get through individual stocks in my market without paying high FX costs and opening separate accounts to get access to certain exchanges. So I recommend this to anyone to average into over time, collect your monthly dividend payments, have a more globally diversified portfolio all in this one name instead of needing to pick securities that have exposure to these markets in order to diversify. This is just a much easier way to do it. With that being said, I am not a financial advisor, so please do your own research before making any investments. I'm just sharing one of the ETFs that I invest in and I personally love averaging into and collecting the monthly dividend. So thank you guys a lot for listening to this video. If you like this type of content, please subscribe to the channel. Consider liking the video. I'd love to hear from you in the comments if you have any opinions on this ETF or you have alternative ETFs for Canadians to gain international exposure. Would love to check them out myself because I feel like we don't have a ton of options that are Canadian hedged and trading on the TSX that kind of fit the mold of this ETF. So I'd love to hear if there's something I'm missing out there. Also, for any Canadians that watch the channel, would love to hear from you. I'm always torn whether I should be posting a bit more Canadian content in terms of stocks and ETFs and my opinions on the Canadian market, or just keep it broad to the US. I personally invest pretty heavily in both the Canadian and the US market, so I love kind of talking about both of those markets. But let me know if we have any any Canadians and any interest that you guys have in terms of the market. Anyways, see you. Bye.